Hey traders, Raghee here, and in this update to wrap up the week, we're going to take another look at the current state of the market. And if you've been following along in the last few videos, you know that we've talked about how to define CHOP and what the probability is within CHOP. We've talked about what the upper end of the choppy range is and where the market could pull back to potentially if it sucks back down into the range. The last thing really to talk about here is what if the markets move higher? Remember, there's really only at any time three things a market can do. Right? That's really it. What are the three movements a market can make at a particular level? It could accelerate through the level. It could stall at the level. And then from that stall, it could reverse. Right? Now, when we talk about levels are what our indicators, our chart patterns, moving averages, whatever we're using to determine why a particular zone or price on a chart is likely to create an action. So there's really only three reactions that we're looking for from specific zones or levels, right? That's really it. Zones or levels, and then what's the reaction? The reaction is largely reliant on the underlying environment. So if this were an uptrend and we're talking about support and resistance, what I expect support and resistance to do in an uptrend is markedly different than what I would expect support and resistance to do. And when I mean to do, I mean accelerate, stall, and or reverse in a downtrend. And again, it's very different in CHOP. So the underlying market environment dictates how the markets typically will move at those reaction levels and whether or not they'll accelerate, whether or not they'll stall and or reverse. What we have right now is that stall in the Dow. And of course, this is going to affect the DIA. Notice I'm looking at the futures to make this decision. So you can see there's definitely some hesitation as to whether or not we're going to keep moving higher. The idea here is, what is the Dow made of? And this is something that stock traders, options traders, futures traders all have to be aware of. What is the Dow made of? It's actually primarily, its main two ingredients, if you will, are XLF and XLK. And this is what my recent class was all about. This is what the live trading is going to be emphasizing. This is what we're going to be doing come Monday, 2 p.m. So there's still time to catch the class on replay. It was a 4-hour class. You can review that over the weekend. Then come Monday, 2 p.m. Eastern, we're going to dive into watch list building and live trading, what we're dealing with. And I think that where we are right now is about as interesting a level as we've been in a while. So live trading is really going to be great. Now, if we know that XLF and XLK are what predominantly make up the Dow, well, then we ask ourselves, what's XLF doing? If there's a corner of the market that is still buy the dippable within the confines of the Dow, it's XLF. So would I buy the YM futures? Would I buy DIA? Or am I just going to say, thank you, YM, for the breakout. We'll just continue to buy dips in XLF, where the structure is actually very different than that of the YM or the DIA. Let's take the example out of the NASDAQ. All right, the NASDAQ hasn't actually reached resistance yet. We're not at this level. We could be exhausting because we know we have resistance here. We know we even have resistance there. We could be exhausting somewhere in this area. The higher it is, I think the lower the risk the trade may be, because risk, of course, is partly what's the chasm between your entry and where you're going to get out. But if this is where we roll over, am I super excited to play NQ? Well, the fact of the matter is we're already short XLC. And this is the weaker part of the NAS. It's already transitioned into a downtrend before, and even though it's in CHOP right now, the previous trend definitely influences what I will be doing in terms of the directional bias. So already in XLC, and if the NQ continues to move lower, fantastic. We're already positioned in the weaker corner of that. All right, what about the S&P? Well, if I take a look at the ES, again, flirting with that area, terrific. We can see the previous Darvis signal. We can see the previous high right there at a major decision level. Am I interested in playing a breakout of a choppy S&P? Not even a little bit. But again, what is the S&P? It's XLK, which is going to pretty much move like QQQ or NQ futures. It's XLF, and it's XLV. Well, if you ask me what I want to do with S&P, it's not going to be at the index level. It's going to be at the sector level. And I'm going to be looking to likely short XLK and XLV, and I want to continue to buy pullbacks in XLF, which is between that and KRE. These are two of our great long positions. Add energies to that, add natural gas to that, terrific, right? There are longs and shorts in this market. It doesn't have to be this binary, the S&P is going to do this next thing. Who cares? What we can do is get more granular. What we can do is take advantage of the movement through the sectors. And that is exactly what I've been advocating all week, and actually for the better part of the last few weeks. So I hope this video ties it all together. I'm looking forward to seeing you at the live trading on Monday. Have a terrific weekend. Be good to each other, and I'll see you in the next update. And smash that like button on the way out. Leave your comments, leave your questions. I always read them. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.